Hey guys, I'm Tim Kotzman here with Ben Workman, the Workin' Man. Ben, how's it going today?
It's going great, Tim. It's hard to be anything but happy on days like today. We're watching a thesis start to play out that a lot of people have been talking about for quite some time. And I think it's really starting to grab the attention of the masses. I've seen more people coming in trying to learn about MicroStrategy and convertible debt in the last 2 days than I think I have for the last year. So it's a pretty incredible time, and it's fun that we're a part of it.
And we're recording on Wednesday. And correct me if I'm wrong, if it's on one of your screens there, Bitcoin's around 94,000, maybe a little below, maybe a little above. And MicroStrategy's around 495,
490.
490. Okay.
490. Yep.
And almost touched 500 this morning, right?
It did. Yeah, it got really close. You've always got to watch when you get to those psychological levels, what's going to happen. Because anytime you get to a big round number, right, something like $100 and now $500, and you'll see it again at $1,000, you tend to get a lot of people who put a mental number in their head on where they're going to start to exit a trade. And I would imagine $500 was a big one of those. So you saw quite a few people probably take some profits at that point. It'll be the same thing with Bitcoin, right? We'll probably see a little bit of resistance at 100,000, although we're all watching a lot of these companies load up a lot of ammo to push us past it. So we'll have to see. I'm not so sure yet.
So I know we want to get to at least two topics today, convertible notes and the NASDAQ 100 tracking that you are all that you're on top of and that you're going to walk us through. But what is your take on what you're seeing on social media right now, where you have a lot of people that are learning about MicroStrategy and what they're doing? And I guess I'm trying to parse or figure out, like, what percentage in your mind are people that are trying to educate themselves with maybe the wrong take or a misinterpretation versus someone that's just trying to troll or engagement farming. I mean, building an audience on any social media platform has value to it. So I'm just wondering what your take is on what one might be versus another.
Yeah, it's very divided, which is kind of funny to watch. I mean, most of the guys that you see in the True North group, we all started the year with very small accounts, right? We were just yelling into the wind, talking about a topic we thought was fun, mostly just because it was the only real company in the Bitcoin game outside of the miners. And so as those audiences have grown, so has the types of people that start engaging with you. And overall, I'll say that the community around MicroStrategy has been wildly supportive. And I've had such little negativity come into any of my posts recently that I've been kind of surprised. You almost expect it, right? It's the
Mhm.
internet, so you're expecting everyone to come and tell you you're an idiot and all the normal things that happen online. But it really hasn't been that way at all. Like, we've gotten a really good community of people who are actually very hungry to learn how this works.
Mhm.
Anyone who's been watching it kind of on the fringe, you go, yeah, it's a cool story, it's a cool thesis. But as you start to follow along the journey and you start to see it evolve over time, which a lot of people who have been with us now for a couple of months have been doing, they've been watching us evolve in the way that we think about MicroStrategy and how they're executing on this. And they're starting to take that and really understand what's happening here. But now, as of about 2 days ago, I started seeing the other side of the crowd come out. There's a
Mhm.
lot of people that are coming in that are doing this can't work. There's no reason for the valuation. It should be one-time net asset value, right? Those voices are getting very, very loud right now. And
Mhm.
it's to be expected, right? Anytime something like this happens and it's running away, if you weren't a part of it, your initial reaction is, I'm going to come up with ways to justify why it shouldn't have worked anyways, and therefore this is just a fluke. But the more and more people are digging into this capital markets activity and starting to see some of the opportunities there, right? And like, Richard Byworth has been a huge net positive coming into the space as well. I know he talked with Jeff Walton earlier today, and he has been just a massively welcomed voice into this community because he brings another really unique perspective with some deep insights into the capital markets. So when he's talking about how maybe the convertible bonds isn't really the only game in town here, and we're going to see this evolve where you might see things like credit default swap show up, which essentially can provide bondholders with a level of insurance against default on these bonds. I mean, those are big ideas, and the different types of traders that are out there and all the incentives that all these different traders have. It's this constantly evolving narrative where we start to really hyper focus on one part because that's all we can digest really at one time, because there's so much going on underneath the hood here that we tend to almost get myopic in the strategy. And everyone assumes when they look at it now that they go, well, the only thing Michael Saylor is going to do is be able to go borrow convertible bonds, and how long can he actually issue these convertible bonds, right? He's got to run out of buyers eventually. And then he comes out and does something like he did this morning, where he says, remember how we were going to do 1.75? Well, now we're going to do 2.6, and it's really going to be 3, right? Have you ever seen them not be oversubscribed yet? So it's been fascinating to see how many people are actually interested in learning how this works. And it's people that normally are not interested in stocks at all. I've got messages across all kinds of social media platforms. Like, I never really did anything on LinkedIn. And all of a sudden I'm getting all these messages from people on LinkedIn as well, who are just saying, thanks for talking about it. It's been really fun to follow around. And that type of stuff, feels really good when you've got an audience that actually does want to learn and they're interested in your perspectives on things. That's a really fun way to cover a topic. So I've really enjoyed it.
And maybe what I'm about to say is going to be almost saying what you just said back to you, but what does it tell you about this moment in time when you have Michael Saylor on an X space yesterday with Jean Van Eck asking him about the MNAV? I mean, and then Michael's response of, well, people that don't understand it, that haven't done the research, that haven't listened to the earnings call, those are the only people that don't understand it. And he goes into the analogies about an oil refinery. And to have the tip of the spear really spending time trying to clarify what's going on, what does that say to you?
Well, these are huge shifts, right? I mean, you also had Saylor on with Cynthia Lummis as well, right? So he's crossing over into all areas out there. He's talking politics. He's in the political sphere over there, talking about Bitcoin. He told everyone that he's going to get to talk to Microsoft's board about a Bitcoin strategy. And then, when you get people like Vanek coming on and asking the question about one times MNAV, which I think is a good question to ask. I think that one's going to have to be reiterated for a long time. People are going to have to really grasp what it means for a company like MicroStrategy to own a ton of Bitcoin, but also to be able to generate yield in the form of additional Bitcoin on top of it continuously. That's a really tough concept to grasp for people who have traditionally looked at like funds that are going to hold the Bitcoin that would trade just at net asset value, right? That's the whole point of those funds. And then even then, I think people were looking at, well, he put out projections for 6 to 10%. So they start trying to do the mental models around what does 6 to 10% growth look like. And now we're seeing him just accelerate faster, right? I don't know what the percentage is going to end up at the end of the year. But if they hit, I did some projections of my own trying to figure out how could they execute on this through the end of the year. And in my views, I'm looking at them getting to 430,000 Bitcoin, which is a 122% increase in the amount of Bitcoin they held at the beginning of the year, which is just an incredible amount of growth, which then trickles down into the yield on the Bitcoin per share metric. So I think that having people that are in traditional finance, people like Jan who are asking the question, is really great, because I think he asked the question honestly and not, in a disbelief manner where he's saying this is the only way this should be interpreted. And Saylor did a really good job of fielding that question and giving all the reasons why he doesn't believe that that should be the case. And so far, the market's aligning to his view on this. It's probably still much below what his view is on this, but you're starting to see the acceptance of the fact that maybe the growth matters. If that growth was coming to a bottom line in US dollars, the market would love this thing, right? But because it's coming in form of Bitcoin, a hard asset, they seem to dismiss it And that just seems silly to me. So I'm glad people are asking the question. And I'm really glad that he's always got an answer teed up and ready. That just seems to blow people's mind. The internet lights up every time that guy talks. He's electric on it. We saw it trickle out from when he did the earnings call, and you never saw that guy have more fun. So it's great to watch, and it's great to kind of see the vindication coming as the realization happens that this guy is the spaceship that's transporting the US dollar over to Bitcoin, right? It's like taking a payload from Earth to Mars if Elon was doing it. Mm-hmm. And that's essentially what he's doing. And he's doing it within the frameworks that are designed in the capital markets. And I think people are just really struggling with the fact that that works. And it happens to work very, very well.
Hey guys, today's episode is brought to you by Stampseed. I would just recommend that you go right to stampseed.com and check it out for yourself. I've held it in my hand. It's a titanium seed phrase storage device. This thing is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount on the entire website. That's TIM15. Is there anything that would be missing from this thesis? You have Bitcoin, a digital commodity. You have MicroStrategy or any publicly traded equity that pursues a leveraged long Bitcoin strategy. A leveraged long strategy would mathematically outperform a 1x, call it a 1-to-1 or ETF sort of strategy. I mean, are we missing anything there?
No, it really is that simple, right? He's using leverage to be able to continuously accumulate more and more Bitcoin, and then he gets the benefits of scale as it grows. So his success is also tied to Bitcoin's success, right? The larger the value of Bitcoin comes, which people don't really tend to argue about. Even the people that are arguing for 1 times net asset value, they all have really high price projections for Bitcoin itself. Mm-hmm. And so if you believe in the future of Bitcoin here, you're watching a company accumulate a vast amount of what's potentially going to be one of the most valuable assets in the world. And he's continuously doing it by adjusting that leverage up higher and higher as the Bitcoin gains more value, right? So 25% of $1 billion and the amount you could borrow with that is a lot different than 25% of $31 billion. So as he gathers more Bitcoin and the market value of that Bitcoin increases, that gives him more and more ability to go out to the market to issue these bonds or whatever the form is, right? I don't think we've seen the final form yet. I think this is just the one right now that has a lot of runway to it. And he's going to be able to utilize that leverage to borrow US dollars at 0%, right? That is a huge, huge achievement that people just saw. If anyone was worried about the market drying up for these convertible bond offerings, one, you saw it with Marathon Digital, who also got 0%. And I think they were at 45% conversion premium. And then MicroStrategy comes out, upsizes their offering to, we'll call it $3 billion, and does it at a 55% conversion premium. And the one thing I haven't seen people talk about yet, but it looks to me like they actually shortened the no-call provision. So a no-call provision in these bonds basically says there's no ability for MicroStrategy to call back these bonds for cash before X date. And usually that date's about 3 years out. Well, in this most recent bond offering, that date's in 2026, not very far away. So it seems like not only are they getting better terms in terms of the coupon with 0%, they're borrowing this money for free, right? There's no drain to cash flow, nothing. And now they're moving that no-call provision closer, which will give them some flexibility with these bonds if their stock continues to perform. But they're also raising money at 55% out of the money, right? So I think it was 433 when they issued the bonds. I think that was the price that they came to, which gives them a conversion price of $672.40, right? That's pretty good. And it means that 130% conversion price is going to be something like $874. So these things, this strategy is really adjusting in the demand dynamics that are coming up as they're issuing these new bonds just show that not only is the demand for these not slowing down, it's speeding up. and there's so much demand that they don't even have to offer a coupon anymore. And it's very important for future bonds that they might issue. I've had some speculation that we saw this $3 billion one. My hunch is that we might see another $3 billion one come up right at the beginning of December, right after they get through the NASDAQ 100 period. And the big deal about this one being 0% is it kind of resets the pricing. So if this one's 2029 at 0%, there's a real chance that if they're replacing the 2030 convertible bonds with another $3 billion offering, there's a real chance they get another 0%. So they might have $6 billion at 0%, which is just incredible. I mean, how much money would you borrow at 0%, Tim? All of it. That's the answer, right? All of it.
Is there any limit to how much they can borrow through that strategy at 0%? Because there's no debt service aspect?
So hypothetically, no, but the reality is they have a risk framework that they're going to stay with it, right? There's this notion out there that they keep levering up further and further, but as a percentage of the fair market value of their Bitcoin, they're really staying in a pretty tight range. I say 25% because they've hovered around that range. My hunch would be that they'll give themselves a wide range for different market dynamics, right? Like they might say, we want to stay between 20 and 35% or 40%, right? We just want to be somewhere in that range, which gives them flexibility for if a market drawdown happens, they can track their current leverage position against the changing value in the Bitcoin. And then they've got other levers they can pull to start to right size it. Like they could go use the ATM, get more Bitcoin, bring it to the balance sheet, which raises the fair market value, which changes that leverage ratio. So really the limit here is going to be whatever their risk framework allows for. And right now, what I've been seeing says that they've got a target they're trying to stick to of around 25%, which essentially makes them 4-to-1 collateralized on the debt. I mean, the debt's unsecured, so it's not collateralized, but the assets that are backing the company, right, are essentially 4-to-1, which is not, in my opinion, overly risky or overextended, particularly when you have most of the people out there that are covering Bitcoin calling for much, much higher Bitcoin prices, right? I mean, if that fair value is going to start rising and we're going to start seeing countries like the United States of America adopting strategic Bitcoin reserves and potentially even putting in place a structure to buy Bitcoin to increase that reserve over time, all bets are off, right? All bets are off on price, because what we're watching happen with MicroStrategy right now is they're draining supply out of the market. I mean, we can't overlook the quantities in which they're buying. And even Saylor said yesterday, I asked myself, who's selling me this stuff and why? Because I'd pay double, right? So even he's confused about where all these Bitcoin are coming from that these people are selling to him. But when he's buying them at a clip of $3 billion at a time, and if he deploys another, call it $5 to $6 billion by the end of the year, that's a lot of Bitcoin draining off exchanges. And I know people track the 1.7 million. That's been kind of a number that it's hovered around for a while. I don't know exactly what it's at today. I'd have to look. But you start to eat into those Bitcoin really quickly. And if you have a large scale buyer coming with no conditions around price, right? If it's not about accumulating at a certain price, for a country like the US or Russia or China or any of those nations, if their only goal is just get the Bitcoin, get as many as they can to put themselves in an advantageous financial position in the world, then they're just going to be buying. So you can start doing the dynamics on what can happen to Bitcoin's price in that scenario, right? You're in price discovery looking for the next seller is what happens. So I don't know where that pushes us, but my hunch is it pushes us higher and quite a bit higher.
And I guess thinking through the game theory of price discovery, just last night, Mike Novogratz on X, he just posted, does anyone know who's selling? Why is this sell wall here at 94,000? There's so much buying going on. And so regardless of why that dynamic is there, once you get through one or several of these sell walls, how does that game theory play out as far as price discovery when everybody that was planning to sell between 90 and 100,000, let's say, all of those sellers have been satisfied and everyone else is holding on for some other psychological number. Maybe it's 200,000, maybe it's $1 million. And obviously there's buyers and sellers every minute of every day in a global
Absolutely.
market. But some of these levels, to your point, are psychological and are nice big round numbers. How do you think through that?
Yeah, so you got to kind of think through who you think the sellers would be, right? What category would they fall into? I think 100,000, you're going to see a lot of retail sellers actually, because 100,000 is a big mental hurdle for a lot of people that are retail investors, right? That number means a lot to a lot of people. So I think you do start to see some profit taking from the retail community there. If you're an institutional holder of Bitcoin and you're looking at the buyers that are coming into the market right now, you're aware of a few of them, right? MicroStrategy's in the market buying, Marathon Digital's buying, Semler Scientific's buying, Metaplanet's buying, and there's a few other ones out there as well that have made some announcements that they're buying as well. That gives you a level of comfort to the downside risk of the position you're holding. And when you have that comfort, you might be willing to move your target to exit your position higher. So what I think you'll actually start seeing is you'll start seeing the gaps between those psychological levels start to change, right? So the next major one after 100 might not come until 200, right? You might have a lot of people that see a lot of buying pressure coming in from entities with deep pools of capital that are not sensitive to the price. And people might say, well, I'm just not going to step in front of this, right? What's Lynn Alden always say? This train stops for nobody, right? And
There's
I think that people
stopping this train.
There's no stopping this train,
Yeah,
right?
I love that. Every time she posts that meme, I just get a smile on my face.
Well, and it's so fitting. And I think we're just finally getting to the point where we might see what that really means. Because you're going to have a lot of buyers where if countries start buying, or a lot of sellers where if countries start buying, they're just going to pull all their assets or all their sell orders out of the market, right? You'll see those levels start to clear out fast, the faster the price starts to move. Because they might start looking at there's more upside here. Why sell now when we know that we have these essentially panic buyers? These are defensive buyers that are about to come, right? So the United States would be a defensive buyer of Bitcoin. They're defensively buying it to protect their standing in the world. That's a different mental model when you're buying Bitcoin than someone in the retail community going, I really hope I can make the 29% this year. That would be huge for me, right? That's a different thing than a giant conglomerate of nations is getting together and trying to devalue my currency and the use of my currency in the world, right? You've got a different problem if that's what you're trying to defend against. So if you see those types of buyers coming and you think that the chance is more likely than not, you're really not interested in selling right now. And you're probably not interested in selling for quite a long time because really we're at the starting blocks here, right? Everyone's starting to get a little euphoric at the moment, which concerns me that a lot of people are going to step out of their positions before we even really get going. Because for so many years, Bitcoin and MicroStrategy, everything in the ecosystem has been fighting this headwind, right? We've had regulators that have been pushing against us. We've had bad actors come into the space that gave the whole space a bad name, right? We've had so many things work against us, and Bitcoin continues to survive, right? And now, for the first time, about 2-3 weeks ago, we finally caught the first tailwind. Things finally shifted into our favor. And so you have to ask yourself, if you were willing to hold through all the periods of all the shenanigans happening with FTX and Celsius and BlockFi and all these firms that blew up, Three Arrows, right? All the guys that got way out over their skis and caused a huge systemic issue, and all the regulators trying to, find ways to block innovation in this space and investment in this space. If you held through all of that, are you really about to exit your position right when things shifted into your favor? Or would you be better served by allowing things to work in your favor here for a few years and see what happens? My opinion is we're at the bottom bend of the S-curve of adoption, right? I think we're just starting to trend up. And I think over the next couple of months, we're going to really see what that means. But if you talk to people like me or most of the other people I talk to, we're now getting to the point where Bitcoin's like the most comfortable part of our investment portfolio. You don't even really look at it anymore. It's been so stable now, and stable meaning just going up. But when you have things like MicroStrategy out there that are doing the much more volatile moves, Bitcoin almost just becomes it's your area of peace in your investment portfolio. You just leave it. You know that there's all these tailwinds coming that are going to benefit the asset class, and you can sleep easy at night holding on to it. You don't have to be concerned about what the price is every day. Check in 6 months or a year, right? It's really not going to matter, because the more you focus on it, the more you get that urge to just take those gains, and you might be getting out right before things that you thought were going to happen finally become reality. So it's fascinating, right? It's amazing developments we're seeing. We're getting the people that really understand the asset in the right places in the cabinet to really have an impact here within the United States, without forgetting that Bitcoin is not a United States asset, right? Bitcoin's a global asset. So the reality is it doesn't matter what the US is going to do right now, because I think the rest of the world is also waking up to the possibilities here. And that shift in power and wealth across nations is going to be something very powerful. And I think you're going to see a lot of countries that are much smaller than the US starting to lean into this, thinking, I might have an opportunity here to get out in front before the actual current reserve currency of the world starts transitioning over into Bitcoin, right? If I can beat them here, I might be able to change my economic standing in whatever the future looks like of economics in the world and reserve assets in the world. So it's going to be a lot of fun to watch for the next couple of weeks.
This morning on X, you had Jeff Park posting something to the effect of, hey guys, look, the Wall Street Bets crowd is buying puts against MicroStrategy in direct opposition to the kid analysts of MSTR True North. How does all of this play out, as far as, just walk us through, as more minds wrap around the current reality and where we may be going from the MicroStrategy standpoint? And just to put them in buckets, right? I'm not trying to pick on anyone. The Wall Street Bets crowd, do they bet against MicroStrategy and then at some point kind of do a 180 and we're all kind of going in the same direction? And how does that also impact, having people betting against and betting for puts and calls against a public equity? I mean, that does make a market. So how important is that? Or, yeah, I'll throw it over to you.
Yeah. So I don't really think there's going to be any, fight between the Wall Street Bets crowd and the kid analysts, right? The Wall Street Bets crowd came along really fast when they started to understand how equities behave, right? And how the options markets influence the equities. So I have seen some of the posts that have come out from Wall Street Bets and all these people that continue to short Bitcoin or buy puts on, or MicroStrategy, buy puts on MicroStrategy. And they're starting to not believe what's happening in the price here. But I think that they're just back in the same position that they probably were all in at the beginning of the GameStop trade, right? It took a long time to really figure out the market dynamics there. And I think that sooner rather than later, that whole crowd is going to align to the position of being long MicroStrategy, because they're going to see that this isn't as simple as a short squeeze, right? And trying to trigger gamma squeezes on this massive short position like they had with GameStop. MicroStrategy doesn't really have very much organic short interest against it. It just doesn't. I think there might be, I'd have to look at the number, maybe the new numbers haven't come out for the 15th yet, but you have to net out of the short interest the shares associated with the convertible bonds, because there's no squeeze to those shares, because the convertible bond holders have the call option with the shares that'll get delivered to them whenever they execute that. So they'll have an offsetting position to that short. So you're not squeezing those shares. So they'll quickly realize that what's happening right now is not a short squeeze, maybe small, but I would bet that the short shares was probably something like 15% of that amount. So maybe there was 10 to 15 million actual short shares on MicroStrategy, which is nothing compared to what you had with GameStop. But what's different about MicroStrategy is essentially taking advantage of the capital markets themselves on your behalf, right?
Mm-hmm.
But they're doing it in a friendly way. It's not an attack for them. They're offering products that Wall Street needs. This is how they generate returns. They need these convertible bond offerings. And so he's just collecting that capital for them and using that leverage to advance the strategy here. But what the Wall Street bets guys will start paying attention to is they'll start looking at the options chain. And so you've probably noticed recently that call options that are further and further out of the money have started showing up.
Mm-hmm.
Like I think today they go all the way up now to $890,
Mm-hmm.
right? Well, just a couple of weeks ago, I think the highest was 500 and something. So, every time the share price rises, that tail end of the options chain continues to get higher. Well, people have learned through the GameStop experience that there's underlying dynamics there with these market makers in terms of how they need to behave. And so you do start to see some of these gamma squeeze, indicators start showing up when you start seeing open interest show up way on the tail end at those 890s and relatively short duration 890s. And the reason that is because if those 890 call options have a delta of, we'll just say 50, that means when they sell a contract, they've got to go buy half a share of, for every, a contract's 100 shares. So they have to go buy 50 shares of MicroStrategy. So the more people that are buying these options, the more shares these market makers have to keep buying. So when you get a confluence of activities that's happening, like we're seeing right now, where now you've got this convertible bond that's out there. So you know that there's buying pressure coming to the Bitcoin market. You also know that there's going to be some shorting happening because the convertible bond guys will short as soon as they're getting these bonds just to hedge their position immediately. So they might short 70% of the 4 million or whatever the number of shares is for this latest bond offering. So you'll have that activity. But if MicroStrategy right now, in anticipation of NASDAQ 100, isn't using the ATM very aggressively, it might mean that we get into a period here over the next week or two where all the inorganic selling pressure comes out of the market, right? People like to think that, well, if they, stop using the ATM, is that like the ATM is a discretionary use instrument. They don't have to use that at any time. So if it just wasn't getting used next week, that would be removing inorganic sell pressure, right? Now you're just left with all the organic demand in the market. Well, if all the organic demand in the market is looking long, and they're starting to figure out that this strategy is underpinned by an asset in and of itself that can't be stopped by anything like a circuit breaker on trading equities. Like imagine if Bitcoin starts squeezing, right? Imagine somebody goes short Bitcoin and they start getting squeezed. You can't call anybody to turn that off, right? We saw that all the games that happened with GameStop as they were trying to put a lid on that. All these hedge fund managers were calling each other and getting in the way. That doesn't exist with Bitcoin, right? Bitcoin's an asset that's out there to the world. You don't get to, there's no CEO of Bitcoin that you're going to call telling them to turn it off. It's not going to happen. So if that starts happening, the dynamics here get really weird. So fundamentally, the MicroStrategy trade is a very different trade than the GameStop one was. But I think that Wall Street bets and those guys are going to start digging in deep. I've had a few of them reach out to me to talk about it. And I think they're starting to understand what's actually happening. And I'm not even saying that right now, the price action we're seeing is some massive squeeze. I actually don't think it is yet. I think that every time all this organic selling pressure comes out of the market, you're just seeing that people want to be really long Bitcoin right now. Everything's aligning. The best thing to be is super long. And I think people are starting to position that way. But the Wall Street bets guys will start to understand the underlying dynamics here that could be at play later. And I think that they'll quickly change their thinking and realize that stepping in front of this train is a problem. That's a miscalculation. And I don't think they'll stay there very long. So I don't think there's going to be any argument. Those guys put out very similar types of research to, what the True North gang does or the kid analysts out there do, right? Like they're all very curious and they do get really deep in the weeds. So I don't think it's very long before they're swimming the same direction as we are.
You mentioned that Bitcoin as a global asset doesn't have an off switch, But the regulated markets do. In fact, in Jeff Park's note about IBIT options coming to market, toward the end of that page, he said that you may see regulated markets shut down. Do you have any thoughts on how that could happen, when that could happen, what that would mean?
Yeah, they absolutely can shut down the regulated markets, right? Like they could stop IBIT from trading if it had some huge sudden burst of activity and it goes up 30%. They could halt trading for a while. But it doesn't mean Bitcoin stops trading, right? And if they turn back on the markets and people are still buying IBIT or buying call options on IBIT, they still have to go buy spot Bitcoin, right? They have to. That's how that product works, right? The whole thing is backed by spot Bitcoin purchases. So even if they pause trading on it, as soon as it resumes, if more buy pressure comes into the market and people are buying up all these shares of IBIT or buying up all these call options of IBIT, forcing the market makers to go buy actual shares of IBIT, IBIT now has to turn around and go buy the Bitcoin. So they can shut it off all they want, but it's going to come back on at some point. And if there's still buying happening in the market or they're behind on the purchasing of the Bitcoin, they're going to have to catch back up. So he's right that that absolutely can happen to things that are trading on the stock market. But the beauty is Bitcoin itself doesn't trade on the stock market, and it trades on exchanges all across the world, right? So if the US markets are struggling with the demand that they're seeing, it doesn't mean that buying is going to stop on exchanges in other countries or on, DeFi exchanges or wherever, right? Wherever people are buying their Bitcoin doesn't mean that part stops. So it's a uniquely scary position to step in front of and feel confident shorting, right?
Mm-hmm.
I think it takes a lot of confidence and maybe a little bit of ego to step in front of it and go, no more. It's not going any farther than this, because you're fighting against money globally. You're not just fighting one small crowd, right?
Mm-hmm.
The Wall Street bets, the kid analysts, even some of these other funds that are involved are very small players in the global scheme of what's happening here. And so I personally am not willing to step in front of this and say, I'm going to take a short position on a MicroStrategy or Bitcoin. I don't see the upside to that play. And I see a lot of downside to that play. So personally, I just don't see the risk reward being there.
The MicroStrategy offering that we were discussing that came out this morning, with it being upsized, is $3 billion. The Marathon offering was $1 billion, both at zero coupon. What are your thoughts on other publicly traded miners? That are there any that might be in a similar position, or other public companies that already have Bitcoin on the balance sheet that are not levered long in the same way that MicroStrategy is, but might be in a position of strength to command an offering at 0% in the same way?
Yeah, I think there's going to be several of them, right? In the mining community, I don't see a lot of the miners jumping in to do this, right? Marathon, Fred Thiel, I think that, they might be unique in that space. The hard part with pricing these, and I personally was surprised that they got a 0% coupon and a 45% conversion premium on their bonds, because the one big difference between a mining stock and a MicroStrategy is the continuous capital investment you have to make to refresh the miners, to make your mining fleet be as efficient as possible so your profitability stays high, right? So they have these cycles that they have to go through in replacing all of their miners, and that's a very capital intensive thing to do. And so during all these periods where the miners really haven't been profitable because the economics just haven't been in their favor and the hash price has been really, really low, you tend to burn a lot of cash. And that's why these companies have gotten a lot of flack for all the dilution that happens with their ATMs, is because, one, they're not really great customers for traditional bank financing, because ASICs are a pretty specific type of equipment and they lose their value really fast because newer machines keep coming out that are more efficient. And so the market kind of falls out from some of these other mining rigs that are out there. So they don't make great bank collateral, because it's really hard to determine what the collateral value of them is. So they tend to have to go and use the equity route to raise capital. So I think that's just a function of the business. I don't have any real heartburn around the fact that they do it. I understand why they need to do it.
Mhm.
Perhaps you see them start offering bonds, but they might be more for updating equipment and things like that. Maybe you do get one or two that take the marathon route, but I'm not betting on a huge flurry of miners doing this. And I don't actually think that's necessarily what we want. I
Mhm.
think what we really want is to see Bitcoin and this strategy expand out of the current box that it's been put in, right? Yeah, you're seeing a lot of companies that are natively supportive of Bitcoin moving into the space, but there's a tremendous amount of companies out there that have stagnant growth, or maybe they don't even have stagnant growth. They might still be growing. They might just be very strong from a cash flow perspective and an asset light model where they don't have to buy manufacturing facilities or all these large assets that they have to pay for, who would be in a perfect position to do something like what MicroStrategy is doing, right? Convert your cash, get your balance sheet to a meaningful percentage of Bitcoin, right? Half of your shareholder equity should be more in the value of Bitcoin than anything else, right? To start to introduce that volatility. If you have an existing options market out there, that's great. That helps a lot. But really, you need the volume trading on your stock. But the volatility from Bitcoin really helps with that. And then if you're a strong enough company where you've got a well-performing business and you're now going to employ the MicroStrategy approach to the convertible debt market, they might start viewing you as a very low risk investment, right? If you've got a strong underlying business and now they go out and they're offering convertible debt at 40% for the first ones, right? Just trying to drum up the interest and get people to come to them. But you've got a very strong business backing it. You might see a huge amount of interest in those bonds, which is going to give you all the flexibility in the world on pricing and scaling the strategy. So the big thing that those companies will have to focus on is, are they the right size where they can make this meaningful to their business, right? Like a Microsoft, we're not really looking for Microsoft to go issue convertible debt to buy Bitcoin. I don't think that's what anyone's actually pushing them for. They're looking at them going, you have a cash balance that's almost the size of MicroStrategy's entire market cap.
Mhm.
Maybe that shouldn't stay in US dollars, right? Just start converting that. But I think it's really going to be those companies that are kind of in that 2 billion and below market cap range, that have strong cash flowing businesses, that don't have really any debt on the balance sheet, and they're not required to hold, large properties or anything of that nature. So they're nimble. Those are really the ideal companies to start implementing a strategy like this, because it gives them a lot of upside to leverage the strength they have as an organization and then go become players in the capital markets where the demand for this type of debt is really high, and transition your company over to a Bitcoin treasury company. I think that's more the range. I'm looking for the ones that are really going to adopt the MicroStrategy playbook. I think some of the other ones are just, quite frankly, too big to create the meaningful volatility that MicroStrategy created. Because remember, when they started, they were a sub $2 billion company, right? So the impact of that volatility is much higher if you're that size versus if you're a $100 billion company to begin with. Not that they couldn't pull it off, but the volatility and the speed with which you can create the volatility slants in favor of some of the guys that are a little bit smaller. So that's where I'm looking for the next ones to emerge that are going to really take up the mantle here on the strategy and push it forward.
Can you walk us through from the very beginning of MicroStrategy in August of 2020, adopting the Bitcoin strategy, and what mechanisms they used, I believe, starting with traditional debt and then walking us through today and maybe down the journey of the convertible notes and how all of this is now set up, and then kind of look to the future on the convertible side.
Yeah. The beauty of what MicroStrategy did is they kind of went through all the pain points of this strategy, so other companies might be able to skip a few of them, right? So the very first thing that you do is you convert all your cash, right? MicroStrategy had a huge amount of cash sitting on their balance sheet. I think it was something around $500 million that Saylor determined was just melting in place, right? Just
Mhm.
eroding value for shareholders year after year. So that's the easiest thing to do, is convert cash, get that over to Bitcoin. And that was where he started. That's the natural starting point here. When they went into the traditional debt, That's a little bit different, right? And everyone, that was a really weird story that they had with Silvergate. And I know that we don't have a ton of time, so I won't go deep down that rabbit hole. But when you take traditional debt, it can be very advantageous early on because you don't have any equity associated with that debt, right? There's no conversion of that debt that's going to dilute the shares. And so if you're early on in the strategy and your business is very strong, like MicroStrategy was, they had a strong underlying business that could support the debt. Taking on the debt allows you to accumulate Bitcoin early in this cycle as you're spinning up this strategy without having to give away your equity yet. So now that Bitcoin lives on your balance sheet. It starts to expand that fair market value of the Bitcoin that you hold. It also starts to introduce some of that volatility to your equity because now people see the value of your organization tied to the asset that's moving a lot. So when MicroStrategy did that, I think that was kind of the first play, was that you try to get to scale with the amount of Bitcoin you're buying as quickly as possible. The downside to debt is that you get tied into covenants, right? So banks will often place debt service coverage covenants on it or collateral requirement covenants on it. So you do lose some of your flexibility when you go down that route, but it might be the right trade-off for companies that are starting early. And I think it was for MicroStrategy at the time. But now what you've seen is MicroStrategy go fully over into the convertibles, right? And what was shocking was early on in their strategy when they got the first 0% convertible bond with 2027s. I think that was pretty surprising to people that they were able to do that. But you got to remember that that was a very low rate environment that they were operating in, right?
Mm-hmm.
So the rates you were going to see on normal convertible bonds were pretty low anyways. So I think that they could pull it off, and there was enough excitement at the time to make that work. But what you've seen now is now that they have this access to the capital markets where they can do all their debt offerings unencumbered, right? No debt service coverage that's going to cause a bank to call your loan back, right? None of those, they're not tied down by any of those things, which is a powerful place to operate this strategy from because you have total freedom. None of the Bitcoin are pledged to anybody. And so you're not really worried about that outside component influencing how you execute your strategy. It's all unsecured debt. So for other companies that go along that journey, what I could see them doing is starting with traditional debt if they just want to get the Bitcoin now. Because if you're looking at, 2025 in an administration change, and if they're starting to be believers that the US might adopt a Bitcoin reserve, they might want to accumulate those Bitcoin before that bill gets passed, right? Because after that happens, companies have to worry about the price they're buying Bitcoin at. That's a pretty important part of the equation here. So they want to get as many as they can. And accelerating that, even if it means using traditional debt today, might be the best play that they have because they can get the Bitcoin now, let it start introducing the volatility, let the market start to view them more as a Bitcoin treasury company, let that create the volatility and the liquidity in their equity that is then going to support the convertible debt market. Those guys need deep liquidity on the shares to be able to execute their strategy. So boosting that liquidity early really gives them an advantage. And that's a very important dynamic that they have to focus very hard on, is building that liquidity and building the right scale to get these guys. And then once you do have that, now you've got the ability to go issue a convertible debt offering, and you might be able to raise it at 40, 50% beyond your current share price. And then you can get rid of that traditional debt that you took on, but you're doing it using far less equity than you initially would have at the valuations your company was at early on in the process. So you're focusing on your shareholders and being sensitive to the dilution factor here, even though it's not value dilutive, right? But share count goes up, voting power goes down. I mean, people, I think, are starting to understand that component of it. But it gives them that flexibility to say, we don't really want to issue double the shares today, right? If we're a small company, we don't want to have to use 100% dilution of our shares to get these Bitcoin, but we can support the debt. Maybe we'll use the debt to get us the Bitcoin first. And we'll try to build up this model and start messaging out to the communities that, hey, this is the strategy we're going to start executing on now. Build that excitement, get the liquidity to your stock, enter the convertible bond market, and now you're rolling, right? Once you're in that space, now you're really rolling. And right now, it looks like there's plenty of demand for a lot of new players. I saw the estimates that were anticipating like $100 billion of convertible debt in 2025 would come out. Well, if MicroStrategy is only going to be doing, 5 or 10, that means that there's still a lot of room. And that market might actually grow with the performance that they see in these types of offerings. So there might even be more room. And it's also not the final frontier. There's a huge, huge rabbit hole to go down with the fixed income market and the possibilities for the types of bonds that you can start to offer as an organization. And while the convertible ones are getting all the shine right now, and that's kind of the most interesting place to play at the moment, we're not seeing the final evolution here yet. So I think we're going to need to keep our eyes open and see where Saylor takes the strategy. And you're going to get a lot of companies that are going to ride in the tailwind of his success here and be able to achieve success for themselves.
I know that we are covering both the convertible side and also here in a minute, the NASDAQ 100 QQQ tracking and potential inclusion. And there are so many great resources out there. MSTRmoon.com, shout out to Max Colbert, is a great resource, and people can certainly reference that website if they wish for some of this. Can you walk us through the NASDAQ 100, how you're tracking it, the potential inclusion? And I mean, I've even had people in my phone texting me saying, hey, can you guys cover this? I didn't even know that this was a thing. So I just think it's very timely and something that's worth covering.
Absolutely. And it's one of the things that makes a corporation much more unique from an ETF. So one of the ones that's actually happening right now is you have the MSCI World Index is in the process of doing their rebalancing. So I think that might be some of the volume you're seeing on MicroStrategy shares currently, because their rebalance is supposed to be done by the 26th of November. So we're coming up on that, which just happens to be 3 days before the snapshot date for the NASDAQ 100. So as of yesterday, and I'll run it again at the close of today, as of yesterday, they were at 43, I believe, number 43 on the NASDAQ 100 list, which in my tracking shows that we for sure would have a little bit over $1.05 billion in buying pressure coming in for MicroStrategy. And what that means is it's a little unique to the first time you get into the index. So because MicroStrategy is not currently listed in the NASDAQ 100, if they get included, they have to get an initial allocation that's going to come to them. So companies that are already in the NASDAQ 100, they'll get incremental benefits if their market cap has grown. MicroStrategy will get the full impact of an initial allocation. And so what you're looking for the NASDAQ 100 is it basically takes all the companies trading on the NASDAQ except financial firms, and it looks at the top 100 companies within NASDAQ, right? Hence why it's called the NASDAQ 100. When you're a non-incumbent, if you don't already have a place in the NASDAQ 100, really the only way to guarantee yourself a spot is to make it into the top 75 by the time the snapshot's taken, because their methodology says the top 75 get in. From there, there's a little bit of leeway that they have. So say I was a company that got into the NASDAQ 100 last year, but this year I fell out and now I'm, 115th in the ranking. That company would still keep a spot in the NASDAQ 100. And that's just, they give all the companies that get in, they give them a little bit of flexibility for fluctuations, but you only get 1 year where that can happen, right? If the next year you still fall out of the 100, you're out, right? So companies are fighting for that last 25 slots and trying to fill those in. So with MicroStrategy, we look at, it's not great to bank on getting one of those bottom 25 slots because there's a lot of things that can work against you. You're not at an advantage there. So what we've always been pushing is get above 75, right? Become undeniable to the index and then get in. And once you're in, the higher your ranking is, the higher your allocation is going to become. So the allocation is determined by taking the sum of all the market caps of all the companies that are going to be in the NASDAQ 100. And your allocation is your market cap at the snapshot date divided by the total market cap. So you're wanting this growth in market cap, which is why people haven't really been against MicroStrategy using the ATM over the last several weeks, is because if that ATM usage doesn't bring your share price down, what it does do is it brings your share count up, right?
Mm-hmm.
And market cap is just a function of share count times price. Now, NASDAQ's a little bit different. They'll only include publicly available shares. So in MicroStrategy's case, that's only the Class A shares. The Class B shares that Saylor owns, those aren't publicly listed, so those won't get counted. So we're looking at how many Class A shares are we going to have out as of the 29th of November, and whatever the price is that closes the market on the 29th. And that's going to determine where MicroStrategy falls in that ranking. And there'll be a little bit of a gap in time before we'll know anything, because December 13 is actually when NASDAQ will announce the changes to the NASDAQ 100. So that's when people will find out for sure, because there's been speculation from people that will NASDAQ look at MicroStrategy differently because now they're saying they're a Bitcoin treasury company or they're operating like an investment bank, right? But right now, the classification criteria for a company really revolves around the sources of revenue. So when I look at it, I would view that as a departure from the methodology. And I think that NASDAQ would need to take more time to really flush out how they're going to determine classifications going forward versus singling out a single entity and then pushing them out of the index because they made some exception to how they typically classified companies. So I think that MicroStrategy is still going to qualify. But when they get announced on the 13th, now people are going to know. So you tend to get some front running that happens because the actual rebalancing of all these funds that are aligned to the NASDAQ 100, funds like the QQQ, which most people know, that'll happen by the 20th of December. So you've got this period of time between the snapshot date. People are going to hold their breath, right, for 2 weeks here, waiting for that final outcome to come. But once you're in, you can look back at several other entities that got into the NASDAQ 100, and you can see what happened with that amount of capital flow. And to be clear, I don't think that what I'm estimating, the $1.05 billion, that's not the end amount, right? I had to cap my own tracking to kind of the top 3 funds because that was what I could wrap my arms around at the time. Mm-hmm. But there's been people going out and doing more digging on other types of funds or other entities that are investing in alignment with the NASDAQ 100 that could bring significantly more capital in during that time period. So it's going to be very fascinating to see what happens when they enter, how high they enter, because I don't think anyone thought they were going to get into the high 40s or the low 40s, I guess. Mm-hmm. And, now, the jumps have to become bigger to claim more spots, but you can still boost your market cap. And so we've still got, I think we'll have 6 more trading days after today for that market cap to move. And there could be a real impactful allocation that's coming and a shift in people's portfolios that could bring a lot of buying pressure into the market on top of the existing organic buying pressure that's already been happening. So it's very, very unique to corporations to have these types of things happening. And the S&P 500 is going to be the next one people are looking forward to. That realistically isn't probably until next summer, the first shot. But what you start to get with a company like MicroStrategy as they execute on their strategy and they keep building this momentum, if this keeps going, right? If they keep being able to do that arbitrage of taking capital at 0%, converting it over, bringing it into Bitcoin, capturing that 29% CAGR that Bitcoin provides, if they keep doing that and the size of the company keeps growing, you start to get this acceleration effect that happens. Because all these funds, a lot of them rebalance at different times throughout the year. Mm-hmm. So you might have it where, every couple of months, you're getting a new injection of capital from the rebalancing of these funds because the market cap of MicroStrategy grows. So some funds will rebalance quarterly, some funds rebalance annually, and that can create this accelerator effect that I think people overlook a lot when they look at being a corporation versus an ETF. There's a real benefit to that, and there's real value there.
I super appreciate your time today. Where can people find you online, and any closing thoughts?
I'm pretty much in one place. You can find me at Ben Werkman on Twitter, X. That's pretty much where I do all of my posting these days. And nothing really particular in closing thoughts. I mean, this has just been such an exciting time that I'm actually getting pretty tired because you don't get to sleep a whole lot when this stuff's going on. You're trying to think of the possibilities and work out what can happen, and the next day you're seeing it happen. So I'm excited for what's to come. I really do believe we're just getting off the starting line here. So I think it's going to get really exciting.
And did you mention something right before we started today off camera about when we hit $100,000, you're going to put on a tie? Is that accurate?
I did.
Okay.
It is. It is. I will make that commitment to you. I had to apologize for breaking the dress code for the Tim Kotzman Bitcoin Treasury show here, but the markets are roaring, so it's a work day today. So I didn't have time to change, but I do tell you, once we're over 100,000, I will suit up with a tie and we will get ready to go again.
I mean, it makes sense. You're a working man. You're Ben Werkman, Werkman with an E.
I try.
Thank you so much, Ben.
Absolutely. Thank you, Tim.